Despite millions unemployed, a continuing economic crisis and agreement among leaders of both the Democrats and the Republicans that something needs to be done, the chances of passing a second stimulus package before the election appears dimmer than ever. House Speaker Nancy Pelosi, DCA, has adamantly supported a stimulus proposal with a price tag north of $2 trillion, while Republican senators have chafed at anything above $1 trillion. The White House, depending on who's talking or tweeting on its behalf, has bounced back and forth between those figures. Economists at Wells Fargo Securities peg the chances of a deal at about 1 in 4. Ultimately, we think the prospects for a new stimulus bill are unlikely, as the current position of the two parties appears to be a bridge too far, said Wells Fargo Securities economist Michael Pugliese in a research note. Both sides seem dug in and willing to wait until the election. Should Washington wait until 2021 to provide another round of stimulus spending, the world may change in some interesting ways. Stocks began their mid-February descent into bear market territory when Italian hospitals were overwhelmed with COVID-19 patients. But it quickly recovered once the Fed cut short-term interest rates to zero and it became clear Washington would pass the multi-trillion-dollar Coronavirus Aid, Relief, and Economic Security (CARES Act). Since then, the real economy has begun to slowly convalesce, and scientists have made tremendous progress toward a vaccine that could be distributed as early as 2021, much sooner than had been initially anticipated. The S&P 500 is now up almost 3% year-to-date, in the wake of its vertiginous drop and equally breathtaking recovery. This unlikely YTD growth isn't necessarily founded on expectations of more money from Washington. I think the market rally is based on three things, in descending order: the Fed keeping interest rates low for longer, the prospect of a virus vaccine early in 2021, and the likelihood of a stimulus package, said CFRA chief investment strategist Sam Stovall. The first two are most important. I think Wall Street wouldn't be surprised if no stimulus package was passed before the election. While investors may hold steady should a second stimulus fail to materialize, the particular contours of this stock market rally will continue to evolve. The effects on the market will be more visible below the surface than on the surface, with ongoing sector rotation toward the work-from-home stocks, Facebook, Apple, Amazon, Netflix, Google, at the expense of the reopened stocks, cyclicals, value, small caps, says Jerian Timmer, Director of Global Macro at Fidelity Investments. Given the size of the former, this could keep the overall market up but lead to a more narrow leadership. In his most recent press conference, Fed Chair Powell reiterated a now familiar theme: Congress and the White House need to spend more money as quickly as possible,